So yesterday we talked about having a daily close above support, and that would solidify this as a more solid bullish move. And so we did get that close. We got that daily close, and we got a couple questions about this, so let me just clarify. When I say a daily close, all we're talking about is this is a daily chart, so every candle represents 24 hours. So when I talk about a daily close, I'm talking about each candle as it closes every 24 hours. So we did get that close, and because of that, we're seeing this run here. It gave the market enough confidence to continue this run. We saw a bunch of consolidation, a bunch of indecision, and then we closed, continued the run. So this is what we were looking at yesterday, and we drew this arrow, and we targeted 8,900 as our resistance line for this run. We're experiencing some resistance here at 8,800. There is some there, but 8,900 is obviously going to be a lot stronger, and we'll talk about that here in a minute. So we came down to 8,300 like we talked about, established support here twice. So built support, ran up, couldn't really break this resistance, came back down, and still held support. And then we closed above this support, and since we did that, it gave the market enough confidence to continue. So we're making a run here, and we're really falling off of resistance right now, but 8,900 is going to be where you'd want to watch, right around 8,900. And here's why. Because we've got two very important moving averages here, and a lot of people are talking about the death cross, and they're talking about the possibility of that impacting the market quite a bit. So the red line is a 200-day moving average, and the green line is a 50-day moving average, and essentially all this does is calculate momentum for you. So a 200-day moving average is generally considered a very strong level of resistance, and you see it falls right on 9,000. So coming back up, we're looking right around 9,000, 8,900, 9,000 in this box here. So between 8,900 and 9,000, we're going to interact with this 200-day moving average, and we have to see if we have enough momentum to break that. That's going to be really crucial to break. So what about the death cross? So just so we're clear on what we're talking about here, a death cross is when the 50-day moving average crosses below the 200-day moving average, and it's generally considered a very bearish sign. A golden cross is the opposite, so it's when the 50-day moving average crosses above the 200-day moving average, and it's generally considered a very bullish signal. So is a death cross a bearish signal? And the answer to that is yes, it is a bearish signal. But I want you to notice what happened back in 2014 with Bitcoin. So we did have the death cross happen. Then we went into a sideways market for a bit, came back up, crossed back above, got the golden cross, which is the opposite, and we crossed back above for a little bit. But notice what happened. We come back down. This time we crossed back below it, and that was a serious bearish signal, and the market just went into a longer term correction until it finally caught a break. We went above it here months later in November. We crossed back above, got that bullish sign again, and started moving higher, and we've stayed above it. Stayed above it all the way till now. So crossing below it is going to be a bearish signal. Just looking at what we saw in the past for Bitcoin, it is going to be a very bearish signal. Now we could see a similar scenario play out where we cross below and then we come back through, get the golden cross, everybody thinks it's okay, and we go back through again. That is possible. So is it a bearish sign? Yes, it is. But Could we come right back through it? It's happened before. We did cross back through it shortly after that in 2014, but we still did see that happen. So we could break through it, see the death cross, a couple weeks later see a golden cross, and then after a short run see another death cross. These are good indicators and generally considered very bearish and bullish signals depending on if it's a death cross or a golden cross. But with the chart, we can move back and forth, and we can break above, we can break below, and we have to watch what the market is doing. The situation in 2014 was obviously different than it is now, so that could play into the dynamics of the market. But we are not bullish at this point. We have a lot to go to get to a bullish state, and really the completion and the start of a bullish run would be breaking and holding above resistance here, because we haven't been able to do that. We haven't been able to do it twice, and so that is going to be the ultimate target to really turn this bullish. But like I said, we do have a long ways to go to get there. So should you be worried about a death cross? You should definitely keep that in mind. You should definitely watch that and make sure you're aware of what could happen. But just like in 2014, we could see it cross below, cross back above, and then actually see the real death cross, which signaled a serious bear market. So again, you just have to watch what the market's doing. I think there is a lot of stigma behind the death cross, and if it does happen, we might see a lot of sell-off simply because people are looking at that as an indicator. But it is something you do want to be aware of, definitely. So we're looking at this, and we've been working on this chart for a few days now. Breaking above really 9,000 and closing above on the daily, above 9,000, would really give strength to this run. But it's going to be tough for us to do that because we've got a serious line of resistance here with the 200-day moving average to break above. And we've just seen this historically. So 2 candles here, 2 daily candles here before we actually broke it. And that's just a sign of strength for this moving average. And here as well. Coming back down, we struggled to break it as well. So it does hold. It holds really well against support and resistance. So you do want to be aware of it. You do want to be watching these things, because ultimately that's the only way you're going to know what's going to happen with price. So where are we going from here? We may very well be looking at that 9,000 level to test. We are experiencing some resistance here, so we could fall back off a little bit and then continue, or we could fall back off to 8,300. So there are a couple options there, but you do have to be aware of support, and that's really the important note that you want to take away from this. If we do break above and hold above the 200-day moving average like we saw here, it's going to signal a pretty serious move. And that's unless we do see the death cross here. If we break above, see the death cross, everybody gets scared, they panic, you never know what could happen. But generally speaking, a move above this resistance and a hold above that would be a very strong sign for the market. That's what we're looking at. We're still kind of working on the same charts, and not too much has happened since yesterday. We just held support there at 23.6, got that daily close that we talked about, and now we're seeing this run up, and we're kind of hanging on resistance right now as we speak. That's going to do it. If you have a question, definitely leave that in the comments. I'll do my best to answer any questions you may have. If you're not subscribed, we'd definitely appreciate you doing that. Take care, guys.